Wall Street is about to strap 2 times leverage onto the biggest IPO in a decade. And most of the people who buy it will never read the fine print. SPCU is the Defiance Daily Target 2X Long SpaceX ETF. It starts trading on the New York Stock Exchange on Monday, June 15th, 3 days after SpaceX itself lists on the Nasdaq under the ticker SPCX. The fund has one job: deliver 200% of SpaceX's daily price move before fees and expenses. The timing is no accident. SpaceX is the most anticipated listing in years, with $18.7 billion in revenue last year, a Starlink business growing 50% annually with over 10 million subscribers, and the XAIC acquisition that folded Grok and the X platform into the company. 25 SpaceX-related ETFs have registered with the SEC, and 12 of them are leveraged. SPCU is Defiance's entry in that race. Here is the part most buyers will skip. SPCU does not own a single share of SpaceX. It gets its exposure synthetically, through swap agreements and options contracts that reference the stock. No voting rights, no actual equity. Just a contract that pays roughly twice SpaceX's daily move minus costs. And that word daily is doing heavy lifting. The 2 times target resets every trading day. Hold longer than that, and your return is each day's move compounded, which can drift far from twice SpaceX's total return. In a volatile sideways market, that compounding quietly eats your money even if the stock goes nowhere. That is not theoretical. We covered MSTU, the 2 times MicroStrategy ETF, on this channel. The underlying stock fell 53%. The leveraged fund fell 91%. That is what daily reset math does over time. But SPCU carries a risk. Most leveraged funds do not. It is leveraging a stock that is days old. The prospectus itself warns that swaps and options on a freshly listed stock may be limited, illiquid, or expensive, which means the fund may not even hit its 2 times target. Add IPO lockup expirations a few months out, and you have leverage stacked on some of the most unpredictable price action in markets. Performance history, there is none. The fund launches Monday on a stock that will have traded for a single day. Anyone projecting returns is guessing. What we do know is what Defiance states plainly. A large enough single-day drop in SpaceX could wipe out your entire position. At 2 times leverage, a 50% down day means zero. So who is this actually for? Day traders. People expressing a one-day bullish view on SpaceX with a position they watch and close. If you want long-term SpaceX exposure, owning SPCX directly, or a fund that simply holds it, gets you there without the decay. SPCU is a power tool, and power tools do exactly what the label says, including to your fingers. If this breakdown saved you a surprise, like the video and subscribe, because we cover a new ETF nearly every day. And tell me in the comments, would you trade a 2 times ETF on a stock that has been public for 3 days? I read every answer.